All right, I think we can kick this off. So thanks everybody for joining today this Twitter Spaces together with Smilee and IPOR Labs. So I guess the first step to jumpstart this would be to run a round of introduction. So I'll pass the mic to Albiwara, which is the co-founder of Smilee Finance, and then we can go to the next one.
Hello, hi everyone. Great to be here, and thanks for joining this Twitter space with IPOR. So just a couple of words about myself. I'm one of the co-founders of Smilee Finance. Just a quick intro, what I've done before joining and building this. I spent almost 5 years doing M&A, mainly in Europe, with a focus in Milan and Paris. After that, I spent I did short experience in a blockchain VC fund and acted as a business angel with some promising startups. And then I decided to move as a builder because I was following the space since a while, and I found out the perfect angle in DeFi to showcase, let me say, more innovation into the finance space. So that's why I opted for, let me say, something decentralized. It is something that I believe more than centralized. And thanks to the others, we started working on Smilee, trying to innovate the ecosystem and support for massive adoption and to scale it up in a proper way, being less fragile. So here with me, we are also Metadato. I leave the floor to present himself, and then we can move to IPOR.
Yeah, I think we can pass the word to Darren from IPOR Labs if you want to introduce yourself.
Yeah, sure. Hi guys. Thanks for organizing this. My name's Darren. I'm the co-founder and CEO of IPOR Labs. We build the IPOR protocol, which consists of a benchmark rate and interest rate derivatives for DeFi. I've been building in the space for the past 12 years across the various functions, exchanges, L1s, payments, security token infrastructure, also as an angel and advising multiple protocols.
Awesome. Dimitar, you want to introduce yourself?
Yeah, sure. Hi, everyone. Happy to be here. Dimitar, CSO and co-founder of IPOR. I am in my 7th year in crypto now. I've been building in the space since 2016. I actually started building crypto products for banks. I actually started first by building crypto products for banks, and later I moved to build centralized exchanges. So went full crypto instead of banking crypto. And I also have been in DeFi from extremely early, from basically before the term was even coined, mostly dabbling in bonding curves and how you can create decentralized autonomous organizations, yes, DAOs, utilizing basically incentive structures to align basically the incentives between the different shareholders.
Hey everyone, if you want to also introduce myself, I'm Matteo, Metadato for the Twitter guys, also from Smilee Finance, co-founder. I'm more the product guy. I come from TradFi as well, worked at capital markets and investment banking for a while, then said, actually, let's jump into the Web3 world, starting in the real world asset tokenization. Worked there for a while with the tech team of Smilee, by the way, so we've been really working together for many years by now on those topics. And then with Albi and Nicolò, our head of engineering, of financial engineering, we had this idea behind Smilee, and we said, okay, let's build this cool new stuff. Thank you for being here.
All right, I think we're just missing IPOR Intern. If you wanna introduce yourself.
Yeah, so it's IPOR Intern. I was a Bitcoin maxi, and then I became a DGen in DeFi Summit. Now I'm gonna win the competition of Smilee. That's the first thing. Yeah, little experience. Right now, IPOR Intern. I've been in DeFi basically since it started in 2020. And I was very deep in Bitcoin before. I'm a software developer at IPOR too.
Nice. Well, if you're gonna trade the same way you wrote the thread on Smilee, you're gonna win for sure. so, so I I guess we can kick off now by going to the first topic, which is let's have the both teams. So we can start with Alberto and Metadato from Smilee. Introducing what actually Smilee is to the audience today.
Yeah, if you want, I can take this one. So this time I start and not Albi. So basically, Smilee is a new DeFi primitive. We will release it on Arbitrum to start. Our idea has been from day one to kind of bring better liquidity to the option market. We do see many cool ideas on other spaces, like on perpetuals you have from the YDX to GMX, a lot of innovation with real traction. Swap, you have a lot of DEXs. Money market, you have a lot of stuff happening, super cool, on interest rates now even more thanks to IPOR also bringing additional innovation to the space. But then when you go to option, you don't really see anything that found perfect market fit to really scale in a capital efficient manner and so on. All the amazing protocols out there are doing a great job, especially at pricing. More and more discussing with them, I can see how their attention is being put on how to price on chain properly the stuff. We think the missing component is liquidity, so something that can allow to source liquidity in a scalable manner. And so we created Smilee. What's the idea behind? The idea behind is that the source of liquidity that can be used for those protocols is the same one we use for the swap, so DEX-like liquidity. To reach the conclusion, we work a lot on the concept of impermanent loss, and we learned how to decompose it into options. So for Smilee, a liquidity provider willing to bear impermanent loss is basically an option seller of an entire portfolio of options. And through that, we can then scale or hedge or do whatever for entire portfolios of options, also entire protocol, just with one liquidity provider. So we move away from a model where we have one option seller, one option buyer, to a model where we have one liquidity provider provide liquidity to multiple option buyers. This we think is a great game changer when it comes to this kind of things. And so this is the vision around which we build the protocol. Then to start, to simplify a bit this complex task, for which we have done basically all the financial engineering, but obviously software engineers require a bit more time. To start, we design two initial products that are the real yield, so a vault that collects DEX-like liquidity. You pay, you earn an APY in USDC. That's why we call it real yield. And you pay with impermanent loss, which is, by the way, if you compute it properly, not the big deal actually. So we will also over time do more education and showcase more the real mathematics behind to prove that actually the break even for these products are pretty broad, in terms of market movement. And on the other side, we use the liquidity to create an impermanent gain vault. So the opposite of the impermanent loss, which is something super good to hedge impermanent loss in case in certain market scenario you want to hedge, but we think even more as an option strategy. So as a portfolio of options you can use to kind of recreate basically recreate a position that is non-directional. So you make money, the market moves either up or down. Which is something TradFi many people do, many traders from the TradFi DJ trader to the hedge funds, which you cannot really do on chain properly due to lack of liquidity, issue with pricing, so on and so forth. For this reason, and also to showcase how cool Smilee is, the first product will be super capital efficient. So we're talking about very relevant leverage with no liquidation risk into this initial permanent gain vault. And the trend competition will allow you to test it and see how cool it is actually, not just words but real numbers.
Nice, awesome. So if anybody on the IPOR side wants to then explain a little bit what IPOR is and what products you guys are building, that would be awesome.
Okay, so As Matteo was mentioning, there's different derivatives products that are being built in the DeFi space, right? So, Smilee is a derivative off of LP positions. You have a lot of things like GMX, DYDX, which are derivatives off of the assets themselves. So in IPOR, we really looked at the credit market side. So if you split TVL down the middle, it's pretty evenly distributed between DEXs and between lending markets, right? So we take two principles from traditional credit markets. The first is the idea of a transparent benchmark rate that you can use to create other products, and we deem that the IPOR, or the interprotocol overblock rate. You can think of it as a repo-like rate that's sourced directly from the money markets. So in this case, in the current case, Aave V2 and Compound V2. And we just launched a feature today where you can see the visualization of the IPOR weighting. It's volume weighted algorithmically over time. You can find that on app.ipor.io. And so this is a spot rate. In the future, we'll be bootstrapping the yield curve in a similar manner that you use to bootstrap yield curves in emerging markets to essentially extend the term structure in DeFi. On the other side, we use the best of TradFi and the best of DeFi. So in traditional finance, the interest rate derivative market is one of the largest markets in the world. We're talking between 450 trillion and 600 trillion notional value. And this underpins global debt. And what we do is we take this traditional financial instrument that typically requires an exchange of cash flow between two financial institutions, and we build the best of DeFi. So in DeFi, you have the peer-to-pool model. So rather than trading against a partner where you have to agree on tenor, you have to agree on size, on rate, we use the simple construction of a liquidity pool with liquidity providers, an AMM to price risk, and in the case of interest rates, it's volatility, and then the trader can trade against that. And so that product is live. It's a 1 month fixed or floating swap. We'll start to extend the durations of these instruments. We're also looking at different vaults inside of IPOR, inside of the IPOR LPs, looking at also fixed income instruments and fixed borrowing instruments. And so you can stay tuned for that. Currently, IPOR is the number 5 derivative protocol by TVL.
Wow, that's really awesome. And I guess that I would really like to get from both of you in whichever turn you want. This can be even like a free discussion. Like what of your single like respective protocol is actually doing, like to scale DeFi to reach the next billion users and plus, like to actually target that number of users and that target of users that is maybe a little skeptical of DeFi or is not really used to DeFi. So as you were mentioning before, Darren, like even like doing something that is commonly used on the TradFi market or even Smilee side, like volatility trading is one of the biggest thing when it comes to TradFi. So yeah, I would really like to start the discussion onto this topic. Whoever wants
if you want, I can go. I just took a coffee, so I'm pretty full of energy, even though it's just half of the day actually for me. So it shall be like that. Obviously, for us as Smilee, the idea, it's twofold, I would say. On one side, for sure, is empowering this kind of volatility-based products on chain for real. Sometimes in DeFi, I realize that some people kind of think that options and volatility are for advanced players. Coming from TradFi, I always have had the opposite experience somehow. I started my career, my first internship was at a very huge private bank called UBS. We were advising super rich people, and you know what? Most of the products sold, besides standard equity position or bond position, but most of the products were structured products that are mainly made out of options. Similarly, if you go check out Robinhood-like stuff, so maybe TradFi oriented in terms of assets, not crypto necessarily, but if you go onto those kind of players, and there are many other less famous that we could also take a look at, many of them make a lot of money, actually, most of the money, most of the time, through option trading, done by retailers at the point, certain information. Similarly, corporates, they use quite a lot of options to hedge their exposure, so very real-world related assets, real economy related use cases are very much into options and this kind of things. And obviously, in the end, also hedge funds do that. As a paradox, actually, the more complex, the more advanced the player, the more it's just doing some sort of replication and market making of the option. The real user are exactly the less super sophisticated players. So from my point of view, our point of view on bringing this kind of assets to and this kind of capability to on-chain protocols means expanding the user base, providing new tools that somehow allows also to invest with a more risk-balanced manner. You know, I mean, if I take a highly, extremely leveraged linear position with a perpetual, I mean, that's a super risk exposure. Somehow, if I buy an option, you know, I can get the upside, get some leverage, but at a cost that is somehow predefined. And so, you know, it's easier to manage the risk with this kind of products compared to with a linear leverage one. This is one side of the story. The other side, for us, we do believe that DeFi will become the TradFi. We are into the industry. We do believe DeFi is so much more efficient than once the regulation now finally slowly coming at the point, once we have this regulation, we will definitely see TradFi jumping in. Maybe FTX-like things from the outside seems having stopped this thing a bit, but actually they proved even more how much more efficient is DeFi compared to what they are using in TradFi and CeFi. And so it will fasten the movement. And in that area, we see Smilee exactly as a building block. So once we will have the Uniswap for the Nasdaq Stock Exchange, hopefully we will have also the Smilee to source liquidity to then create options on top, maybe done by Premia, I don't know, you know, DOPEX, Lyra, whatever. But, you know, this is how somehow we see the space and how we do our part in reaching a broader user base for DeFi.
Yeah, so maybe I can cover a little bit on the DeFi side. I think that actually both the protocols, both IPOR and Smilee are working in terms of like scaling DeFi, because in DeFi right now, both on the spot and on the credit markets, we are really dealing with like very crude instruments, which are hardly to attract a lot of capital. So like a little background story. Yes, I started working on that thing back in 2017. Back then I was advising Anton Bukov on a project that he was building, which was basically like a smart wallet. Yes, it would allow anybody to put their crypto into that smart wallet, and then anybody on Ethereum could go there and arbitrage that portfolio, paying fees. And in a way, you know, you by holding your tokens in your wallet, you become like a liquidity provider for DeFi, and people pay in order to rebalance your portfolio. So for one reason or another, he then moved on to build 1inch, and that thing basically later turned into what Balancer kind of is today. But we actually did not see the effect of that until Uniswap V2 came out for the spot market particularly. And like back then, I started providing liquidity. Very fast, I understood actually that with the volatility that comes, I'm just exposing myself to losses from impermanent loss. And we were discussing that internally with the team. I've been speaking it with Darren like many years ago, and that it just does not make sense for me to be like a liquidity provider under that scenario. And people kind of like found out maybe like 1.5 years later that actually it is unprofitable to be a liquidity provider on the big pairs, because obviously, like if you're going to be like a liquidity provider on some shitcoin that just launched, there are totally different incentives there. You don't really care about the impermanent loss and so on. You just get in, get out, direct liquidity and so on. But this is not the XY curve. Obviously, it is not a good instrument that can scale to billions of dollars of liquidity and trading. Yes. So, and you are solving that problem. On our side, with the credit markets, we kind of have the same thing. We have credit markets that basically are run based on variable rates. We have some very crude construct there where we have some linear curve up to like a kink of 80% utilization, and then that curve changes and it starts basically becomes like an exponential from that point on. And this really is optimizing not for price discovery or for like supply and demand and like for what the cost of capital is, but it's simply optimizing for liquidity. So this is another very crude instrument, which is extremely hard for us to see how we are going to see those big players come into DeFi and to scale that thing to scale those credit markets to tens or hundreds of billions of dollars worth of liquidity. Not to mention that in terms of the borrowers, if you're going to be forced to always borrow like on the variable rate, it's very difficult to create like structured products to create like consumer products that users are going to be purchasing for youth or for whatever it is. So we saw that and we are like, okay, what is the best way in the world to turn a variable rate into a fixed rate, and that's basically the interest rate swap. And obviously, like there was nobody building that in the space, nobody even close. So we saw like a great opportunity to go there and become a market leader. So yeah, in terms of scaling DeFi, we right now are just like both of our protocols are just like improving on the very, very crude DeFi primitives that we have right now. Yeah, that's my point of view.
Yeah, I totally agree with what you're saying. It's funny, because when you approach DeFi from a perspective of a market that is it's been built as we speak, you actually realize that the initial DeFi 1.0, let's call it like that, was really like the most simple primitives being built, but nonetheless the ones that were the most needed. And now, as we are building and as we are approaching like maturity, we see all these traditional instruments being replicated into the DeFi ecosystem, but in a way in which, of course, makes sense for the technology that we're building on, which differs. It's very much different from the one that we're used to build upon. And I think this applies 100% to Smilee as well. Like the whole basically realizing that like DEX LPs are actually like it's an option trading scenario actually, So maybe Mattia, if you wanna like go a little bit on that, that like the whole DEX LPs being liquidity, but also like options.
Yeah, actually, it's something. Can you hear me?
Yeah,
Yep.
Okay, I mean, apologies. I thought my Twitter was crashing. Actually, it's the most fascinating thing to me in DeFi. That is not technology applied to finance. Is the mix. It's really something rebuilt, new, with totally new concept. Smilee has been created around the concept of impermanent loss. That is one of the most native thing of DeFi, I'd say, because it doesn't exist. So much so now I cannot speak to basically whoever I speak with doesn't understand what I do, because if it's a person from finance don't know what impermanent loss is, if it's a person from other area don't know what the technology is, so somehow it's becoming just for Digen understanding what I do. But so this is the super fascinating stuff that makes it even more fascinating than fintech, which is also something somehow close to DeFi, different. Still a super cool industry. Coming specifically to Uniswap, AMM, and saying what you said, There is one interesting thing I got at Denver somehow. I mean, we were already discussing research internally, but I really understood it just at Denver, chatting with a lot of very smart guy, DeFi Maxi, and super advanced DeFi quant guys that were all around there. That it's in the end, you know what? In TradFi, to create an option, you sell it as an hedge fund and you replicate it on the underlying asset. That means you buy and sell the underlying asset in a manner that replicates the payoff, and the way you end up protected. So you create the option out of thin air because it's just a derivative. It's not like something done differently. And you know what? In DeFi, the model cannot exactly work. People try to replicate, but due to the many constraints or some of the constraints that you have on chain, you cannot really apply the same algorithm you would use. But you know what? An AMM is an automated market maker, so it is actually already doing the market making job, and so basically it's already kind of replicating the option. The issue is that you just need to know the mathematics. If you know the mathematics, as we did, so then maybe I give a couple of info, then obviously our quant or our white paper and other research paper we are publishing over time are the go-to area to find those info. But if you really do the mathematics, you realize that it's actually even better than TradFi. So in TradFi, you would replicate buy and selling, and thanks to the super efficient technology behind, you could do it. At a first glance, you look at DeFi and say, oh, I cannot do that. You see, DeFi has more limitation. I cannot do that. But at a second glance, really go into detail, you realize it's embedded. So you don't even need to buy and sell stuff. You simply need to know the mathematics, which is, from a point of view, incredible. And so as a result, just knowing the mathematics, you end up with the same result without doing even zero operation, basically. So this is something incredible, really. And DeFi is full of these things. Like you think about something, you think more and more, and you realize it's already there. The technology is already creating the results you want to achieve in a way that is actually even more efficient. Coming on how to decompose the option in permanent loss and these things. So Uniswap itself is more and more contributing to the research on this topic. More and more protocols and people are releasing paper that says why a UniV3 position is basically an option. And the idea started from there, because in UniV3 you have with a super concentrated position, like the liquidity is concentrated as much as possible, you almost end up to something similar, because due to the switch between one token and the other, if you compute the payoff and you represent it graphically, you realize it's basically that of an option. And so from that kind of observation, people start realizing that actually Uniswap v3 was an option machine. We can share more research paper done also by others, so it's more it's less partial to what we say. The additional thing we did at Smilee was to realize that perfect. So if one UniV3 super concentrated position is one option, plenty of UniV3 super concentrated position a full range position, for instance, or a broad range position is a portfolio of option. And that's more complex to imagine, but if you think like connecting many small, many single super concentrated position all together and ended up somehow with a full range position, you realize that actually you are basically building the same stuff as a portfolio of option. The computation behind is not super easy. I have to admit, so we really work through that quite a lot. Also, it's not necessarily a closed formula. So while permanent loss is a closed formula, so you have a formula representing in it, it can be derived in many ways. We have different ways, obviously, internally developed. The more you add complexity, the more it becomes systems that you have to solve computationally. But spoiler alert, in future we will soon release, not sure about soon, but in the next months we will release somehow a paper more related to this kind of topic, an academic paper like the one we did on the Greeks exposure, so the risk exposure of liquidity provisioning on a DEX, and somehow we release more of our deep knowledge of this kind of stuff. But yeah, it's a super cool topic. Incredible to see how Uniswap, without even maybe knowing it, but maybe without even knowing, has created something super cool. Not just by building Uniswap itself, but actually building it in a way that it enables also the derivatives on top of itself.
Yeah, that's really, like, when you think about it, it's somewhat mind-blowing. So at this point, like, we've discussed about quote quote, like the past and the present, like the primitives that have been built and the discoveries that have been done and the research that's been conducted on these topics. Now I think it's interesting to look at the future, so what is next, for DeFi, both on a scaling standpoint, but also like on a feature standpoint. Like, what's something that right now it's difficult to achieve, but that could be achieved, in the next years or so. I think that's a really interesting topic. Again, who wants to go first? Please take the lead.
I mean, I'm okay to go here. I think that, in DeFi, we always try to say, like, okay, how are we going to onboard people? Yes, how are we going to onboard like people that are currently not in DeFi, and to showcase them, like, how they can make money in DeFi. Yes, we always aim to onboard the masses. And like, onboarding of the masses is not going to happen by asking them, okay, come here, be a liquidity provider on this protocol, or underwrite options, or do anything. It will be by providing them with products. Yes, products like, for example, I have also been selling products like investment banking, structured notes. I'm sure that all of you are very, very familiar with like different types of structured notes. But like a simple thing, yes, a structured note with like a capital protection or 95% capital protection and an upside of, let's say, 10% per annum if the SAP does not fall below 2,700. That's a simple product. And people really like those things, because like they see what is the potential downside, they see what is the potential upside, and they put the money. And in that way, they become like normal people, become liquidity providers in DeFi. Yes, they scale up the industry. They put more money in. Now we can do more operations. And the tools that we are building right now, that's where all of this is going to lead to. Yes, it's going to lead to us being able to create such much more simple products, which does not require people to understand how the protocol is working, or what exactly is happening, or who is utilizing it, who is buying those options, or who is buying those interest rate swaps. They just know, okay, this is the performance. I know if I put my money here, the average performance has been like 8% per year for the past blah, blah, blah. And the downside is X, yes. And you can clearly see it on charts. You don't need to speculate, how much am I going to lose next month potentially? Because even now, majority of people don't know. Yes, for example, if you ask like, okay, how much money did you make or lose from your Uniswap position in the previous 3 months? You literally have no idea. Yes, there are very limited amount of tools that allow you to track those performances, etc., etc. And it seems like in DeFi we thrive on like not being like transparent about information, I guess, because it's basically not in the interest of anyone. So we always try to obfuscate things with like complexity and just like make it like very big brained in terms of just like, to make people, come here, ape here, and you find out whether it's risky later. Yeah. So one word, better customer products.
Yeah, if I can add on that, actually, I do love what you said about the opacity, the opacity and the complexity of understanding what's going on. And I totally agree, by the way. I totally agree. It's incredible how DeFi is super advanced on certain stuff, and on some other, it's kind of impossible to understand, but not just because it's maybe impossible. Simply people don't describe it or describe it poorly. Studying many protocols in the space, sometimes they don't want to, also for us maybe, but sometimes they don't have time to properly describe what they do. Sometimes they don't have the willingness. Sometimes they don't have, they don't want to tell other people what they're really building because they want to protect their kind of internal knowledge. All those things put together makes the space kind of impossible to understand. As I told you before, I started in the real world assets, real world asset tokenization, and that was an interesting area because it somehow is connecting somehow to TradFi, and it's an area where actually opacity is very well known and somehow also considered positively. So somehow similar to DeFi in certain aspects. But you know what, at the end of the day, happened there, and it's happening more and more, that in any case, the more money and smart people jump in, the more over time things become clear. And I think, the question you Tony, asked could be answered with like, this new technology will enable this, or this new protocol as a base layer will enable this other stuff. Cool, obviously, there are plenty of things. For sure, a lot of people are talking about, omni-chain stuff, multi-chain stuff that are for sure super cool, for instance. But, the very thing, not related that much to technology, but more related to the people jumping in and also to the people jumping out due to the end of the bull market and the bear market, is that the quality of the builders, of the people in, is super high at present. And those kind of people and the kind of smart money jumping in, the people staying in are people that want to build things that are clear, good, people can understand what's going on. There is more and more research about all those protocols and more also saying, you know what, that was a cool idea from a technical perspective, but super bad from a financial perspective. And so at the end, what will be possible is to finally have a more clear, I don't say a perfect one, but a more clear space in terms of opportunity of what people are building, of what's the performance of your investment, so on and so forth. And also the decision remaining are more and more the smartest one, better educated, with a bigger financial understanding of financial topics. So this to me, so I totally agree, and this is to me what we will see in the next year. An improvement on this part, even more than on the technological new enabled solution that will come. That for sure that will be super good, but not that huge game changer as this thing.
And we're always talking about apes, and it's quite funny. I mean, this is something that we have in the space that's it's a reality. You get greed every cycle. In the bear, when things compress, you get a lot of focus on fundamentals. So I'm quite happy about that now. If you look at something like the IPOR index, it's essentially benchmarking what's the risk-free rate in DeFi, right? What's what is the over collateralized lending and borrowing rate in DeFi, and it's quite low. And this is one thing that it doesn't make sense. Right, so we need some more crossovers between what's happening in traditional finance and what's happening in DeFi. So if you think of the DeFi money markets, you're assuming a lot more risks. You're assuming smart contract risk, right? And so there should be some premium in DeFi over the traditional money markets. And if we look at the treasury yield, we're getting subpar returns for assuming this this huge smart contract risk. And it doesn't make sense, but it also means that we don't have these efficient bridges between traditional finance and DeFi. And so, for example, we talked to a couple of different protocols that are looking at tokenizing U.S. treasuries. And if you build this bridge essentially between DeFi and CeFi, then you have this arbitrage of opportunity. So why is all of these, there's hundreds of billions in stablecoins trapped getting subpar yields in DeFi? It's illogical. But if this dynamic inverts, actually we see something like IPOR as a bridge for traditional capital into DeFi. So, for example, if you get traditional fixed income players, some of the largest funds in the world actually putting deposits, the entry into DeFi is quite simple, right? Maybe not so simple in these times, but it used to be you could send a wire to Circle, you get USDC, and that's a new asset being issued inside of DeFi. That increases the TVL, and it has this kind of rising tide lifts all ships type movement, right? So anytime that we've seen an increase in the credit side in DeFi, we've seen an increase in the assets. So we see this kind of bridge between the traditional world and DeFi inexistent, or at least inefficient. And, this is something that I hope we can bridge the gap in this coming year.
Yeah, so in general, there were so before there were no tools to manage your risk or to hedge your exposure to whatever, to impermanent loss, to interest rates, because it's very primitive. So you had people providing liquidity, but there was there were no tools to take the opposite side of impermanent loss. This is what you're bidding. The same for IPOR. For example, these interest rates are very primitive. They work based on utilization rates. And so far until now, there were no tools to create like a benchmark or like an IPOR index, which is going to measure the cost of money in DeFi. Like, for example, there are protocols where you have lenders and borrowers, where you don't have to be a lender in the first place to borrow, like Alpha or Mora or Gearbox. So they might use an utilization rate, they might use the utilization rate to derive the interest rates, but they might as well like reference an instrument like the IPOR index, which is going to be reflecting the actual state of what is the cost of money, what it takes to borrow. It's not a perfect hedge because these loans are perpetual, most of them. So there is no way to construct a yield curve, but it's definitely a lot better than what there was in the past.
Very insightful conversation here. So I guess that we're approaching to the conclusion of the space. So I would like maybe both of you guys to go a little over, like the logical conclusion of all this. So we've talked about, like the past, the present, and the future, and how we think DeFi should be scaling. So maybe like going a little bit more in depth regarding the two protocols. So what is actually IPOR and what is actually Smilee doing, respectively, to fulfill this desire of scaling in terms of product, in terms of vision, in terms of features. What the next steps are. Of course, it's something that's going to take some time, but I think it's really interesting for everybody, to connect the dots, in regards to what actually in practice the protocols are doing to actually achieve all of this.
So I would say it's working from first principles. Like you can go multi-chain, or you can create like some weird dynamics using game theory, like tokenomics. But in the end, it's all about working from first principle and give different ways for people to use financial instruments the same way as they would do in DeFi, in traditional finance. So, but doing it in a transparent, permissionless manner. So you have to ask for permission to create a pool. Like, for example, if you are a DAO and you want to manage your treasury, you need some ways to hedge your risk. So interest rate swap, for example, are one of the best instruments for the fixed income funds of DeFi, which are DAOs. Smilee, for example, as well, for impermanent loss, like it's okay to provide liquidity and start earning from fees, but if you are losing money from impermanent loss, like you need some instrument to take the opposite side, protect yourself.
Yeah, so I would say like on the IPOR side, like to explain like the protocol a little bit more in depth. Yeah, so as Darren was saying, first we create that public good, which is like the IPOR index, which is being printed on chain every so often based on an algorithm which is called the heartbeat. So that's how we call it, the heartbeat of DeFi, which basically shows you on chain transparently, and you can calculate it directly in the smart contract. What is the cost of money in DeFi? Now we use this tool as a benchmark to price interest rate swaps. Yes, allow people to pay fixed, receive floating, or receive fixed, pay floating, like go long or short, basically on the interest rates. Now this gives you the ability to hedge any product that you might want to build, that you want to, let's say, sell to your customers. Or if you are, if you are a DAO treasury, like the intern was saying, and you need like a reliable income, like an income that is going to be powering up your DAO, paying your salaries, etc., you can use again an interest rate swap to know that you are going to be getting that much money from, let's say, the lending markets. On the other side, leverage protocols like Gearbox, for example, where you basically borrow money in order to use that money to farm something on leverage. Obviously, like the cost of borrowing there is the most important thing, which determines what is going to be the profitability of your strategy. So this is basically on like the tools and the primitive. And for the liquidity providers of IPOR, like the thesis was very, very simple. Like create a protocol where LPs, the liquidity providers, are just better off providing liquidity to this protocol rather than keeping their stable coins in, let's say, Aave or Compound or any other lending market. Why? Because while their money is inside the pool, they are not only earning the interest from the credit markets, but on top of that, they are earning fees from the traders, which want to hedge themselves or speculate on the rates. And they're also earning from the profitability of the interest rate swap that the pool is underwriting. And yeah, just to echo again, like transparency and giving people the tools to know like what the risk they are actually exposed to. This is super important for us. And if you go to our app, you're going to see like our statistics page, our IPOR index page, like everything is built basically to show people what exactly is happening.
Yeah, on Smilee side, so for sure, for us, future developments are also part of the launch on which we are working. So it's kind of the same stuff at present. One thing we want to do to educate more, as I was saying before, in terms of the next big thing we may see in DeFi happening, is to do that, we will stay committed to producing education, even more research level papers and threads and information related to this kind of option world and all the kind of thing you can do that. So it's not common generally for a new protocol, at least this is my opinion, to already have an academic paper out and already have start working on a new one. But we know our staff. We have researched so much before starting building Smilee that we actually have tons of knowledge we want to kind of share to increase the level of skills and understanding into the space. That's one thing. The other thing for sure is launching with to do that we are launching with a trading competition, and actually one of the scope is also to initially help user understanding the potential of the product, because as I said, now in DeFi you cannot really take that easily non-directional bets, and maybe many people are not really thinking in that term, and that's different from TradFi, and so we kind of want to start having them, especially maybe people that didn't move from TradFi to DeFi, but people that started really investing in terms of investment opportunities in the DeFi scene. We want to initiate them to this kind of non-directional volatility-based trading, volatility-based market investment. And that would bring for sure additional knowledge to the space. In terms of product, then, to further scale, to further enhance our outreach with those activities, we are more and more chatting with the other protocols. That's why we are also here with IPOR, for instance. So understanding what we can build together to bring one kind of innovation to another part of the user base and vice versa. One thing I notice sometimes is that maybe there are people that knows everything of a protocol and use it a lot, one protocol, two protocols, and they maybe know nothing of another protocol that may fit into their overall investment portfolio and so on and so forth. So, obviously it takes time understanding, especially due to the past we were saying before, it takes time understanding a protocol. And so obviously maybe I'm an expert of how GMS works and then I know nothing about OPEX or option protocols in general. I know nothing about other solutions, and actually to build an overall portfolio, I shall use many of them at a time. So this kind of also partnership allows to broaden the range, and obviously we will make them part of our technical roadmap in the sense that some of these things can also create brand new products, super cool, and so we will announce them more and more over the next weeks and months, and then we'll enhance the investment horizon opportunities here now available in DeFi.
Awesome. I don't know if there's anybody else that wants to jump in and provide some conclusive thoughts regarding, like the conversation that we just had, or anything related to both projects, since we're approaching the end of the space.
Maybe does anyone in the audience have a question, comment?
Yeah, that too. Like if there's anybody that has questions regarding what we just discussed, or anything related to IPOR or Smilee, just request to speak, and we can bring you on stage and you can ask questions.
Maybe not. It seems like we have a very shy audience today.
Yeah, or we had a super crystal clear.
Crystal clear.
Guest.
No questions ever. Mic drops all around.
Exactly.
Well,
Correct,
I think everyone's a little bit afraid to join the trading competition because the intern already dropped the bombshell at the beginning that they're going to be winning. So
you know how it goes. The smartest guy always get ahead. So that's something we cannot avoid.
It's like the pace car, at the beginning of the race, or like the guy riding the motorcycle with the poor Tour de France people cycling behind them. So
but we are gonna be a team, like the IPOR team. So the three of us.
So you
are
plan
gonna
to
be
win
trading.
as a team and as individual?
Yes, because I saw the rules.
He's just going to carry. He's just going to carry the whole team. We're going to applaud on the side.
I saw the rules, so there's no way for them to dilute my BNL, so I can win both.
Lol. Everybody's just gonna copy trade you. No, I don't want to give anybody's ideas, but that could be an option.
An option. Bad joke. Yeah.
Pun intended or not? Probably.
I hope not.
All right. So I think in the end we were definitely the most crystal clear speakers of all time. As such, nobody's asking any question. So yeah, I guess that if there's nobody that wants to just provide some conclusive thoughts or say anything else, we can wrap this up.
I mean, the final thought on my side is join the trading comp that actually our Niccolo is going to win. No, he's not going to play again. But
trading against your users.
We will do a Twitter space on how to trade option at the time I decided. Like with insights from a real option guy trading millions and tens of millions and millions every day of options.
Well, we are definitely not prepared for some of our IPORians. They do that in pretty big numbers. Even one of them right now, I see him that he's actually in the Twitter spaces and just waiting to jump on that opportunity. Do you give free money with that competition?
You mean Smilee? Yes.
Yes.
Yeah. There's Smilee tokens and USDC for certain brackets. You can check the pinned post on our Twitter account, and you can check the reward structure. But yeah, that's how we structured it. And I think it's really gonna be important, for us also, because allows us to really test the protocol, like stress test the protocol for the first time with I would say large number of users. So we're definitely looking forward to that.
Yeah, if I may add, it's like a funny way to allow very early adopters to have like an exposure in Smilee, and also to be sure that all the people were playing around the app that actually is like more advanced than a traditional testnet will truly test it and give us concrete feedback out of it. So we need we will use it as a stress test to check it out, what we have been built so far.
Yeah, and also I think it's a very smart approach, extracting it for a second, and really analyzing it from a product standpoint, and like incentive alignment also as well. I think it's really interesting because first you're allowing the people that help you the most and people that are gonna be power users of your product to get, as Albi was saying, some exposure to your protocol, but also you're not doing it in a way that is completely detached from the nature of the product. Like this, retweet this, and I'm gonna give you some tokens or some money. But it's actually who's gonna be the best volatility trader. So I think that's it's as simple as it sounds. It's really, I think it's really nails the way a protocol should be, incentivizing on one side usage of like a testnet, and on the other side, of course, to engage his own user base.
Do you guys have a prize for the worst volatility trader?
It's definitely a cool idea. I may win that one. It's a very cool idea.
I don't know if you got a chance to play around with the IPOR trading competition, but there is a biggest loser category. It's a bit of a a token prize for being the worst trader.
Well, oh my God, that's interesting for me.
Now, it's like as much as you can try to be the worst, as everybody does that, it doesn't work anymore, So it makes sense. You cannot even game it. Like you have to become, you naturally become the worst one. So yeah, I think it's funny. We might have got a new idea here. So, and everybody who's listening heard it here first.
Yeah, trading competition on testnet is definitely a very valuable experience. I remember when we launched ours last year in May, we had a trading competition on testnet, and it was some ridiculous numbers. We had thousands and thousands of interest rate swaps being opened. I don't know how many people participated, but it was thousands of people. So it's a very good stress test for your infrastructure as well. Because it's not only for the contracts, but it's for everything. Yes, for your website, for for your blockchain analytics, for everything.
I totally agree, although I'm a bit scared about spiking gas prices on Arbitrum tested. That's the easy way to win. Bet on Arbitrum gas prices spike, although you cannot through Smilee. But
So, sir, we were for 1 week. We were literally 90% of the usage of Coven. Was it Coven? Yeah, it was Coven. 90% of the usage of Coven was IPOR. For a week straight. it was brutal, but it was fun. It really stress tests and prepares you for when you launch on mainnet, because sometimes things don't show up until it's too late. And definitely pre-mainnet is a good place to see whether something will show up.
Now you're giving me yet another interesting metric to keep track of, which is how much of the overall gas is spent on Arbitrum Go Early is gonna be Smilee. if we go above a certain threshold, as much as it increase spikes gas for everyone, it means that long way ahead.
Now you make me regret that we actually did not use that for marketing last year.
Oh, you gave me the best idea ever, though. So at least that idea will be put at good use.
So this has turned from dropping alpha to founder to founder group therapy. So if anyone wants to stick around. No, another thing is, but I hear you guys have you have to be invited. Is that correct? The other thing I wanted to mention before is, out of the testnet, you get some amazing users. You get some long-term community members. So we have some of the IPORians here, that have actually been around since the testnet days, really digging into the protocol and becoming the long-term users and champions. So it's a great way. This is beautiful about DeFi.
Yep. We are gating access for sure initially, but it would be interesting to invite some of the IPORians over to our trading competition as well, as you guys really have some really good traders.
Yeah, but also agree in the end, the idea to the trading comp was to put together all this stuff. I mean, test for real, get user feedback for real, create, that kind of also learning of the project before I ask people to put real money in just to try it out. And also, since we will have the gate access to certain stuff, identify the real supporters from day one, use to help us build the product and loved it. So obviously they will be rewarded in that sense for sure. Fingers crossed, I'd say. We are excited, but also, it's a relevant moment for us for sure. We will have fun. In the end, it'll be super fun.
Past few days have been very hectic. We've been gearing up for the comp, which is gonna start next week. So everybody's on the Smilee team is shaking, and making sure everything is perfectly done. So, but yeah, in the end, looking back, it's gonna be an awesome week. So, looking forward to that.
Great. We'll be looking forward to the invites to pass to the IPOR community.
Cheers. That's for sure. I'll be reaching you guys out after the spaces to set something up. Maybe we can even set up a dedicated IPOR team, so you guys can rock up the team, the collective team PNL. So it's gonna be fun. Of course, everything is gonna be led by IPOR Intern, which is posed to be in the top 10.
Maybe we do like the LIBOR, we just cut up the top value so then we can normalize for everyone else. Sorry, intern.
Sorry. All right. So I think we can definitely wrap this up. So yeah, guys, first off, it's been an awesome conversation. I love when like a conversation starts being led by a few topics, and then it just drives on its own, adds its own fuel, which are the minds of the people participating to the whole space. And this is definitely the case. It was like a mechanic one. It was really like a back and forth and like looking to the past and the future of DeFi and how we can scale it. So really, really great talk. Thank you very much. Thanks everybody who of course also took some time to listen to all of us. And yeah, guys, like be on the lookout for announcements regarding our training competition. And yeah, thanks for for participating to this.
Thank you.
Cheers.
Thank you.
Thank you.
Bye.
Ciao, ciao.